All right, we're live. Hey, everybody, this is Mitch. Thanks so much for joining me. You're watching my live stream. Be the boss of your money. A couple quick things to talk about today. I took off yesterday, had a big event in Woodbury with this organization I'm involved with called CIBS, Commercial Industrial Broker Society. It's basically a commercial real estate group. Great group of people, wonderful friends. And so they had their holiday party last night and I couldn't miss it. And, it was okay to take a little bit of a break and a quiet week, but we do have to go through a couple of things this week. Don't want to take off the whole week, but, I'm just telling you we missed yesterday, but today we're back. The stock of the day today is not what you'd expect. The S&P 500 breaks 4,000 and closes there. So I am very happy about that. It's exciting to see it, and it just goes to show you that investors were a little too negative uh, heading into this quarter. And this is why we always counsel people to not make big moves. Like, I'm just going to get out of the market altogether and wait for things to get better. And all you hear about is chatter about a recession. And that spooks a lot of people. You hear people say things like, I don't know about the stock market because we could be going through a recession. We're going to have an earnings recession. The Fed's going to raise rates. What did those have to do with the stock market? That's what kept you out, really? I mean, those don't have as much to do with the stock market as you think. In fact, those in a way could actually be good for the stock market, like a recession, okay, a shallow one anyway, because the Fed gets to the point where not only does it stop raising rates, but it could start cutting rates. And then we start the cycle again and it goes up. And that's how markets work. So we're going to talk about that. We'll go through a couple of uh, important things over the day and we're going to roll a quick introduction. So stick around, quick market updates and personal finance. Well, personal finance, we like to put the personal into personal finance. That's what makes personal finance personal. I really need to put that into some kind of really catchy tagline, but here's the intro and we're going to get going. If you have any questions, hit me up in the comments. I love hearing from you. It's the best part about what I do. I've seen a lot of people out in the last 2 months or so. I've been to a lot of events and I've seen a lot of you out in person, hashtag IRL in real life. And I want to thank everyone who's come up to me and mention this live stream or my other content, the ones where I'm holding up the signs on the side of the road. But I really appreciate that. A lot of you have been coming up to me saying, I watch your live stream. I've seen your live stream. I enjoy your live stream. I like it. It means a lot to me. It encourages me because sometimes you don't really know who's watching, how many people are watching. And when you're out and about, somebody starts talking to you about something specific that I was talking about during the live stream. It is a big deal. It hits me right here, and it just I find it both encouraging and I greatly appreciate it. All right, so here's the intro. Here we go. Question that I've been getting from investors lately, just very lately, is about FTX, the crypto exchange. And we've been talking about this for weeks. It seems to have really blown up in the news even more, uh, but we were on this show a couple of weeks ago about FTX and about how the confidence in FTX was questioned and that questioning of confidence has spread to other firms. Even Coinbase, for example, is hitting new lows. So let me just talk real quick about this. For those of you who didn't watch the live stream last week and the week before, or you maybe missed this part. I know you all watched it, of course, but maybe you missed this part. Or we need to, re up the topic. Okay, the FTX is basically a crypto exchange. It's a place you could go to buy and sell crypto, and you could keep your crypto there in your wallet. A wallet is like it's like your brokerage account for your stocks. Okay, and it was founded by this guy, Sam Bankman-Fried, right? But it doesn't really matter. He didn't just get to start a giant firm that was worth at one point $32 billion overnight. He had a little bit of success, a few accounts built on it. Uh, Supposedly, he was a very adroit trader, risk arbitrage, and things like that. He was very good in technology, and he had a good reputation already as a good trader, as a good, it's a keen eye um, for yeah, with a keen eye for using technology to trade. So he started FTX, and he had a fund called Alameda. I don't know if you call Alameda a hedge fund, but it was a trading firm where he would buy and sell crypto and make a profit, or attempt to make a profit. And I suppose he had traders working for him also. So he had two businesses, and Alameda got really big, and so did FTX. And as a proven track record of building this FTX, the bigger it got, the better it got, the more he could convince investors to invest in it. To invest their hard, not necessarily as an account holder of crypto at FTX, but as a business partner. People investing into his business plan to grow FTX. And then we find out that he's using FTX accounts, money that, account holders' money, and, he's buying expensive homes, buying things for employees, living the good life. And his Alameda fund was doing very well, making good money. And now, a hallmark of a Ponzi scheme is when you see like outsized returns consistently year in, year out, that's usually the sign of a Ponzi scheme. Every Ponzi scheme that has been perpetuated in the financial services industry has always been marked by really solid returns that are very consistent, like too good to be true. Not outlandish, not like 200, 300% a year, but decent returns year in, year out, no matter what. Always supposedly by someone who says, I figured this game out. I understand where the trouble comes from. I understand where the trades go wrong. And that's exactly what happened with Alameda. Alameda got margin calls, bet wrong. That's Sam Bankman-Fried's fund. So what did Sammy Boy do? He took money from FTX, which was customers' money, and used it to help fund Alameda through a turbulent market and a margin call. I don't know how many people were onto him, but crypto started plunging a little before that. So somebody was onto him probably, and I'm thinking, and decided we better sell crypto before this whole thing blows up. And then another firm, um, the name at the moment evades me, um, but another crypto firm, a bigger one, was the biggest in the industry, was going to buy FTX, which was like the fourth biggest. And they had a letter of intent, an announcement, and everybody's happy. And the next day, this firm who's going to buy FTX says, no, we're not. We're out. We're not going to buy it, because they looked at the numbers, they looked at the balance sheet, and they said, there is something wrong here. We don't want this. And that scared the hell out of people. And once people questioned their confidence, that was it. In financial services, any firm, if investors question your firm, if they question their confidence in your firm, it means they've already lost their confidence and their money is out. They're pulling their money out. So that's what happened to FTX. Investors wanted to get out. FTX didn't have the money. They were exposed for not having the money. They probably never thought everybody would want to take out their money all at once, or many investors at once. And therefore, FTX had to fess up and say, sorry, we don't have the money, because, they were hemming and hawing, excuses, whatever. Everything except the truth, which is now coming out, which is they ran the company with shoddy business practices. All right. And he took the money out to fund Alameda, which got crushed with margin calls. So the money's gone. He lost a lot of money for people. But when you open up an account at FTX, it's like opening up a brokerage account. You don't expect the firm to take your money and use it on their balance sheet, or to trade with your money. It's your account. It's supposed to be separate, segregated from the firm's principal trades. Okay. So that's basically what happened. It's still blowing up. There are other firms in the crypto space, and everyone is questioning everybody. There is no confidence in any of the others until we get through this time, because now you don't trust that any firm could come out and say our fundamentals are good, we're looking good, our balance sheet's strong, our customer funds are where they should be. But nobody's going to believe it. The people would rather shoot first, withdraw their money, and ask questions later than ask questions first and shoot later. So it's just the contagion like that is spreading. Now, it hasn't spread to the broader market. You know, crypto. Sometimes we say Bitcoin when we really mean the whole crypto market, but crypto in general is a speculative asset, if you want to call it an asset. Some people call it make pretend internet money, and some people call it the money of the future. Take your pick. I'm not here to condone either one. You have to decide that, but this is totally buyer beware. Caveat emptor. So, anyway, that's what happened with that. Now, what about regulation? Should we have had more regulation in crypto? I think not. And you might be surprised to hear moi say that. Don't worry, we shouldn't have more regulation in crypto. Here's the thing. It's not so easy to say, why don't the regulators just regulate it already? It's not like waving a magic wand. There are so many facets to crypto. And the whole point of crypto is it's unregulated. You could buy and sell, trade anonymously. Where the point of it is you don't want the government peeking at what you're doing with your money. It's your business. All right. And yet people want a regulatory authority, including Sam Bankman-Fried of FTX was saying, and he's been on Capitol Hill saying we should have regulation. That's balls, isn't it? That is such balls. But the point is, I think a lot of you are pissed off and want regulation because you want crypto, the whole industry, more regulated or heavily regulated, just more than what you're getting today, because somehow you think that this will bail you out of your losing crypto positions. And I'm here to tell you that that's not going to happen. Now, a lot of you think, well, if it's regulated, if crypto is a regulated market, regulated exchanges, the SEC applies its rules to the stock market and other markets to the crypto market, that somehow crypto will be more accepted, more people will put money into it, institutional investors will get involved with it, banks will get more involved with it, and this, cryptos will rise. I don't know where that connection comes from, that one will lead to the next. And I'm thinking that it doesn't even pay to regulate crypto. Crypto is supposed to be an unregulated investment, just like, you have smart contracts, right? It's supposed to be used and regulated by the people who use crypto. But crypto's not being used, you see. Crypto's not being used to evade regulation. I mean, it is in many parts of the world, but it's not. I'm talking about the typical American investor who puts some money into crypto. They're not buying crypto to use it. They're buying crypto to hold on to it for the greater fool theory of someone else paying more for the crypto that they just bought. That's what they're in it for. So somehow you think that if the use cases of it are regulated, that it's going to come to the forefront. But people who trade crypto in the dark internet, who buy and sell things like that, that's what crypto is for. Crypto is to evade the watchful eye of regulators. And now people are screaming, we want regulation, because somehow you think you'll be rescued from your losing positions. I don't think it happens. And I don't think the onus should be on the U.S. regulators to regulate an asset class that you all didn't want regulated in the first place. Now, the Johnny-come-latelys into crypto maybe think there should be regulation, and you could blame this whole debacle with FTX on regulators. But, the people who ran FTX are the ones who blew up. What happened with FTX had nothing to do necessarily with Bitcoin. It had to do with the lack of trust and the violation of trust in an industry, in a sector, crypto. So that's what that was. I think it's an unregulated investment, buyer beware. And ultimately, the users of crypto will be the ones who come up with transparency and regulation of their own to make the crypto exchanges, the overall crypto world, a fairer, more level playing field, and a playing field of disclosure. But that's not what it was for. So there's such a contradiction in terms of what people want with crypto. You bought crypto, it's on you. I mean, really, I'm chiding you. Yes, I am punishing you. I'm reprimanding you. And I know a lot of you are going to be turned off by that, but you bought it. I mean, why are you complaining? You bought it, an unregulated, totally speculative thing. I don't even want to call it an asset or an investment. I don't know what you want to. It's not a currency, but you bought crypto. You're down in it, and now you're thinking that you should be bailed out or the regulators should rescue it. No, you took the shot. That's on you. If you buy a stock and it goes down, it's on you. Now, if there's cases of fraud, then then you have civil court, possibly criminal court, and that is happening. That is happening, from what I understand, with FTX. Okay, fraud is fraud, and that's a different story. But that will wake people up to be more careful with what they put their money into. There shouldn't be a bailout, certainly, and I think people think that if crypto is somehow now regulated, that they'll be bailed out, and the thievery that's taken place in crypto, breaking into wallets and things like that, you're not getting your money back. And if you think regulation is going to somehow get your money back, it's not. Regulators have other things to do than find undetectable, untraceable assets that you put your money into. Again, I don't know if we should call them assets or not, but that's what's going on. And that's my point of view. I actually think, let crypto be unregulated and let the buyer beware. And eventually it'll go into the hands of the people who could take the risk and who know how to regulate it, but it'll become self-regulated. Just want to throw a quick shout out there to Jay, to Jerry. Thank you guys. You guys are good friends. I really appreciate you joining me. Let's take a look at the overall market. I've talked enough about this stuff. So the first thing I want to show you, because I thought this kind of annoyed me a little bit. Today's like the day of sharing things that annoyed Mitch Goldberg today. Okay, but let me pop myself up on the screen. Here's the headline: Path ahead will be bumpy, according to Goldman Sachs. Let me repeat this. Path ahead will be bumpy. They're talking about the stock market. Okay. No shit, Sherlock. The path is always bumpy, and you should always go into the stock market expecting a bumpy path. And a bumpy path means volatile. Volatility is a problem if you put your money in the market and you need to take your money out over the short term during a spike down, because then you wind up taking out less than you put in, and you might have a problem meeting a financial obligation because now you don't have enough money in the stock market anymore because your money is down. It's evaporated somewhat. But we know the path is going to be bumpy. Expect it to be bumpy. Expect your net worth to go up and down, up and down, up and down. This is one reason why real estate investors like to be real estate investors and stock market investors like to be stock market investors, because a real estate investor doesn't see the value of their real estate holdings trade up and down all day long in this ephemeral price movement. You just have an expectation of what your property's worth. You expect you're going to sell it or generate X amount of income, and that's how you value things. Stock market just is like, it's crazy. One day we're up, one day we're down. One day a stock is up $20, the next day it's down $20. But Goldman Sachs coming out and says expect a bumpy ride in the stock market. It's almost like saying, it's like when people say pundits on TV, they say, I've been one. I understand this. I don't do it though. When people say, oh, I think it's a good time to buy the market. I think it's a good time to be in, but we could see more volatility. We're not out of the woods yet. I can't stand that. We're not out of the woods yet. When are we ever out of the woods? There's always another problem to come up. Even when the problems of today go away. War in Ukraine, food insecurity globally. Things change, and then we have another problem, and then someone else, and then someone else will say, "We're not out of the woods yet. I'd be careful, but I would buy here." Like, which one are you? What are you trying to sit on both sides of the fence? Please, everyone, you have your goals, your time until your goals. That's what you should be looking at. Invest according to your own personal finance, not based on Goldman Sachs telling you the path will be bumpy, where some other pundits saying you could buy now, you could buy stocks now, but we're not out of the woods yet. So this way, if the market goes up, that person could say, well, I said you could buy now, but if the market goes down, they could say, but I told you we're not out of the woods yet. It's just like you're always going to try to be right. And my thing is, if you just buy according to you, for your time horizon, to your financial goals, your risk tolerance, you are already right. You were right the minute you said hello. You had me at hello. That is how to invest. I was on a radio show last week with me and myself, this hedge fund manager, and he's like, "Well, the trader in me says, we teach people. The trader in me, we teach people how to, hedge or risk management." And I'm like, what are you telling people to get out of the market, get into the market, telling someone to liquidate their entire net worth and then get back? I mean, I'm not saying that's what he's saying. He's a nice guy and a smart guy. But my view of risk management is have money in bonds and cash, lower your exposure to the stock market, be diversified. Okay. Diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down during a generally down market. But what you need to really do is say, instead of managing risk, manage the things that you can control. And dollar cost averaging, investing into your retirement plan every pay period, getting your employer's 4 or 5% match. Take a look at a health savings account, a Roth IRA. What does your debt look like? Do you have more high interest rate debt than low interest rate debt? Maybe you need to somehow flip that. Should you buy or lease a car? Are you buying too much house when you go out and buy a house? These are the things that you should look at, control what you can control. The stock market will take care of itself. The stock market is always recovered. That'll take care of itself. Are you properly insured? Is your income insured? Is your life insured? Do you have good health insurance? Control what you can control. We've got a couple comments out there, so let's just take a look what we have here. Okay. The same stuff. This is stuff that I can't. It's weird comments through YouTube that I can't really that I can't put on my live stream. Weird shit. Yeah, look at the weirds. Listen, it's it's an open forum when you live stream, so anybody could literally say anything in the comments. But it's up to me if I want to actually show them on the screen and have them permanently emblazoned in my live stream, which I'm not going to do now. Okay, so let's take a look at how the markets did today, because today was actually a pretty good day. Okay, even though it was on light volume, you're going to hear that, but it was a light volume day. It's it's 2 days before Thanksgiving. I get that, but a light volume day is still a day, and the Dow closing above 34,000 for the first time in ages. Folks, we are not that far away from hitting all-time highs. Think about that. NASDAQ 11,000 up 150. That's further away. But the S&P 500 above 4,000 for the first time in months. Gold up a little bit. Oil up a little bit. 10-year yield off a little. The VIX continues to come down. The VIX is now 21. People starting to get pretty comfortable. But we're in a rally, and I think Well, I think people are getting comfortable with the thought that the economy is going to start slowing down. There's more layoffs being announced today. Hewlett Packard announced that they're laying off 4 or 5,000 people today. They're starting to pile up, and that is going to slow the economy down, which should help tamp down inflation, which should help the Federal Reserve come to the conclusion that it could pause raising rates. And then after that, they could pivot, meaning they could start lowering rates. Okay. Let's take a look at bond yields today. Bond yields today. So the 3-month was off a drop at 4.3%, the 6-month at 4.7, the 1 year at 4.79. That is, to me, exceptional that you could get 6-month and 1 years in the 4.7s. 2 years, 4.5, and then they start to go down, and already at the 5-year mark, see that 5-year, you're below 4% again. So take that as you will, but if you have a portfolio that is earmarked for a portion of it in bonds or cash, because you had cash because you didn't want to be in bonds because you're worried about interest rates going up and bond funds going down, which was the case for me. Now is a time when you could consider short-term treasuries, T-bills as they're called. Okay. So something to consider. Let's take a look at crypto. Bitcoin, after hitting a 2-year low, bounced nicely above 16,000 again. I'm not going to get much more into that. And let's talk about the stock of the day. The stock of the day is actually not a stock. It's an index, the S&P 500 index. The S&P 500 in the last year, okay, was down 14%. Its high was at 4,800. Okay, so if the S&P could go up about 20%, it's conceivable we could be at new highs. It is conceivable. It's it's not like I'm saying a stone's throw away for the S&P 500 to hit a new high. Okay, but let's look at the Dow. Well, let me just let's look at the Dow. The Dow's high. The Dow, the high is 36,000. Oh, let's call it 37,000. Okay. 3,000 points on the Dow. It's less than 10% away from a high. It's very conceivable for me to picture the Dow reaching a new high. And it's very conceivable to me to picture the S&P 500 reaching a new high. The S&P has a little bit further to go, so it's not a stone's throw away, but I can definitely look across the valley and clearly see the other side. It's not that far. So that's what's going on in the world, in the wide world of stocks investing. Yeah, it's going to be a bumpy road. It's always going to be a bumpy road, but it doesn't mean you don't invest. It just means you invest the way that's right for you. I can't reinforce this enough. If you, instead of worrying about if the market goes up or down, if you want to be a stock market winner, if you want to be a winner in the stock market, invest according to your time horizon, your financial goals, your risk tolerance. You put those together. I know it sounds so basic, so fundamental, and it's amazing how few people are actually doing the basic and the fundamental. Everybody's talking about private equity and hedge funds and where they can make a buck. You're spinning your wheels. Do it right, and you will be a winner. You win the minute you invest. You're a winner when you invest for the right reasons. That's what we do here. I so greatly appreciate you taking the time to watch this live stream. It means a lot to me. I will keep bringing back value to you. If you think of anything you want to ask me about finance, investing, what have you, hit me up in the comments. I will definitely see the comments and I will definitely get back to you. If there's a topic that you want me to cover in my live stream, something you want to know more about, well, there could be other people who want to know about the same thing. So let me know. I'll do a little research and I'll make sure I talk about it right here on Be the Boss of Your Money. Thanks so much and have a great evening.